I look at the first new accounts that I am doing, the first new accounts that I'm doing, if I look at this, ordinary share capital, they talk about ordinary share capital because we're getting capital by selling shares. What's the accountanese for selling shares? Issuing shares. What do we call shares that's issued? Outstanding. Okay, because they no longer live inside the company. Okay, now we call it ordinary share capital because once you go to university you're going to learn about other shares as well, so it might have different types of capitals. Okay, grade 12 only ordinary share capital. Retained income, did Sir teach you what's retained income? Yeah, it's the part of the profit that the company keeps. And why does the company keep it? Because maybe he wants to expand. Maybe, it's unsure. Do you think when they got to COVID, you know, that 2019, 2020 time, ne? It was a very uncertain time. And so companies would retain a lot of money. Why? A lot of the profit, because they want to keep enough savings so that they can pay their workers at least, even if there's no money coming in. Can you see different reasons? Maybe they have a big loan and they want to pay off their loan. Such income tax, right? So income tax, because the company is paying tax on his earnings. What is his earnings? The profit. Why? Because the company is a legal person. So he needs to, you as a legal person, when you work, you're going to pay ye. You're also paying tax on your income. So this is the form that the company pays. Shareholders for dividends. This is literally what I owe my shareholders. Okay, yes.
So when a company has authorized and then they can choose how many they want to issue.
Yes.
So what do they do with the unissued shares?
That is nothing. That is there for when they need more capital, then they issue it.
Then they issue the
Because remember now, if, let's say your dad gives you 10 lollies. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. You are studying and you don't keep track of how many you eat. So you eat 1, 2, 3, 4, 5, 6. Is the lolly still there? No. Now there's only 4 lollies left. Okay, stock sweets. There's only 4 left. So if you want to eat another stock sweet, you're going to eat one of the 4 that's not eaten. Same thing with shares. I have 10 shares that I'm authorized to issue. I issue 6. Can I issue that 6 again? No, it's no longer the company's. It now belongs to the shareholders. So the company has got 4 left. So when they need capital again, they've got a choice. They can either make a loan or they can issue shares. It's always better to issue shares because you want to get capital on your own terms rather than have to pay it back at interest. So, but now you've got 4 left. So now you can issue either all 4 or maybe issue 2 or 3. And then, let's say you issued 3, it means you've got 1 share left. So later on when you need money again, what do? You issue that 1 share. Now you've got nothing. Now you get to a point you need again and you want to issue, so you just apply to increase your authorized share capital. Okay, so everybody shout, yeah. Yeah, we're going to do buyback. But in school, we're going to get to that. But in school syllabus, if you buy back shares, you're not allowed to issue them again. We say we retire them, which doesn't make sense at all. But that is the syllabus. So you're going to have to ask new ones anyway. Okay. So, let's go. So when I start with the steps, yes?
Why don't all companies just apply for unlimited shares? Why do they need to? Why do they want to apply?
I don't know. I don't know. Remember, you think different than him. You might have the same goals and everything, but the way you go about it is different than the way he would go about it. And every company is a person run by people. And this person, maybe they would not want to do unlimited because they don't want to have unlimited people who can vote. Maybe they want to keep their voting base limited. Because remember, every share is a vote. And what do they vote for at the AGM? The directors, the CEO. That's the two most important votes. Ne? So if you are a promoter and you started the company, you want to stay in control because it's actually your company, even though you didn't give the money for it. Ne? But is your seat at the table guaranteed? No. Because the moment the company starts running, it's a living, breathing thing. And the owners of the company can decide on who they want or not. A few years back, there was this incident where the CEO of a company was photographed lying, eating sushi of a naked girl's tummy. Ne? So that was extremely bad for the company's image. So chances are that the shareholders voted him out of the directorship. Because why would I want? Because remember I told you about fiduciary duty. You always have to act in the best interest of the company. It's the same with a teacher. I have a fiduciary duty. If I go out and there's a possibility that my school children are there, let's say I go to a club, because people are young, your teachers are young, so they go to a club, and you might go to the club as well because you're turning 18 now. And let's face it, most of you go anyway, even if you're not 18. So now you are grooving there on the same dance floor. Nothing wrong with that. But I as a teacher now, I'm grooving there, dancing. Can you see how pretty I dance? Okay, but now, I cannot be drunk and slurring my words and come home. I can't do that. Because is that good for the image of the school? Is it good for the interest of the school? No. And is it good for my job? No. Because that kid is going to sit in my class Monday. Is he going to respect me? Can you see it's the same? No, he won't. He won't. Because he's going to think I'm his chummy. Ne? Immediately my authority has vanished. So, never mind. So that's a stupid example, but a school actually does work like a company. Your parents are the shareholders, the management team is the directors, the principal is the CEO. It basically works on the same principle. And if you look at your management, remember I told you get directors, executive and non-executive. So the SMT, meaning the deputies and the principal and the department heads, they are executive management. The SGB, the parents, is non-executive because they are there in advisory and they authorize certain things, but are they involved in the day-to-day management? No. Do you guys get the picture? Please stop me if I talk too fast. I'm not going to talk slower, but I might, if I think you did listen and didn't hear, repeat. But if I think you were sleeping, I won't. So here we go. So yesterday, most probably, Sir also let you write in all the balances. So let's just quickly see. I told my class yesterday, ordinary share capital and retained income. Can you see both of them has got a she in brackets? Okay, it doesn't mean that company's goals. It just means this is the abbreviation for shareholders' equity. Remember, we started owner's equity, and what's the main portion of owner's equity? Capital, less drawings, plus profit. Then we did partnership. It was capital plus Current plus current. But what was the current? The part of the profit going to the partners. It was basically the net profit less the drawings. Now we get to companies. Can we have drawings? No. Because the owners of the company isn't the managers of the company. They're not inside the company. I can have shares in a company in Switzerland. Ne? Can I, when I go to Switzerland, go into the building and say, oh, you know what, I am a shareholder, meaning I'm a part owner, and my daughter needs paper while we're here in Switzerland. Can we please have some of your stationery? Is that going to happen? They're going to laugh at you. You see, so there's no drawings in companies. But can you see again, it's capital and profit. How is this profit? This is the part of the profit that the company gets. Then we have shareholders and such. So shareholders for dividends is always a liability. Okay? Such can be an asset or a liability. We'll get to it now. Then we have the accounts, the expense accounts that says income tax and dividends. They are not going to the income statement. These two are not in the income statement. Do you understand what I'm writing there? Can you see I'm summarizing for you? These two accounts are not in the income statement. They are part of appropriation. What is appropriation? Your granny gives you a packet of Marie biscuits and says, share it with your cousins. So you all sit in a circle and you say, one for you, one for me. And one for you, and one for me. And one for you, and one for me. I'm appropriating the Marie biscuits in such a way that I'm the happiest. Can you see appropriation? Sharing. Okay. So, if I look, so this is the part that goes off the net profit. Ne? This is the part that goes off the net profit after tax. Does that make sense? Okay, let me explain. If I look at my appropriation T account, you will see here. Let me just close that retained income there. So the most basic form is this. Profit and loss here is my net profit before I subtracted tax. So that's my clean profit. If I was a sole owner, that would have been my profit. But because we are a company, we need to pay tax on that profit. So at this stage, we did Google it, it's 28%. Okay? Every year on the budget speech, you listen, what is company tax? When I was studying, 1988, company tax was 51%. Of their profit. So, 330,000, we already calculated the income tax is 28% or 30% in this exercise, it was 99,000. So now, if I say 330 less 99, I've got less 100 and something left. Ne? Is that right? You guys with me? Now that 100 and something that's left, the company can decide how much of that goes to dividends to the shareholders, how much are we going to give them from the profit, and how much are we going to keep, retain. Does that make sense? Ne? So in other words, let me write it like this. Let's say my profit before tax was 1,000. Ne? Now I subtract tax. Let's say it's 30%. So that would be 300. So my net profit after tax is going to be 700. And that 700 we're going to share with the shareholders. So we're going to decide how much of that 700 is going to be declared as dividends and how much of it are we going to save. Meaning, keeping back, retain. That's how it works. Did I answer your question? Someone asked me. Yes.
Ma'am, so the retained income on your debit side is the one you keep for this year, and the one on the credit side is last year's.
Yes. So this is last year's. So in other words, what happens, can you see, it's separate from the profit and loss because you're not going to pay tax on it again. So that retained income makes that 700 more. You see? Can you see? Let's say that was 100. It means now I've got 800 rand that I can share with the between the shareholders and me. If I declare 800, can you see there's no retained income anymore? No savings. That's not clever, because what am I going to fall back on? If I declare 500 rand dividends, it means I'm saving 200. Can you see then my savings actually increased? If I declare 750, my savings would be 50. So now my savings, my retained, is going to decrease. Is it a bad thing? No. Depends on the situation, because maybe last year we retained a lot because of COVID. Okay? We retained a lot because we were very uncertain about the future. They will also retain a lot in a political unstable situation, especially in a voting year. So now what happens? Next year I'm sitting with all of this retained income. It's going really well with the business. My shareholders were true to me. They didn't sell their shares. They stayed with me. So now I want to say thank you. So I want to increase the dividend payout from last year. Can you see? Then I make I don't need so much savings anymore. So I bring it down, rather pay it out to the shareholders. What is very important if we pay our dividends? What must the company always take into account? Any business, it's the most important thing in your business. Profit or cash? Cash. So if you're in a company, can you pay out dividends if your cash situation is not good? So you can have a profit of 700 billion, né? But your bank is in overdraft forever. You don't, and it's maxed out. Do you have cash available to pay out dividends? No. Then you don't declare dividends till your cash situation improves. It's very important. And they like in a, you will see your paper 1 has got a certain way. The first question is going to be income statement, balance sheet. The second question is going to be calculating ratios, and a new thing we call cash flow statement to see my cash. The third question is analysis and interpretation. So then they might ask you, they might give you your liquidity ratios, né? And then they can ask you something about your dividend payout, if you can. Then you look and you see, oh, my cash, my liquidity is not that good. So it would be better not to buy back shares and not to issue dividends. It's actually stated in the company law. Remember, a company's actions is determined by the company law. They have to work within the law. Okay, now I've gone through all the accounts. Let's do this. So we paid the amount owing to shareholders and SARS. And please remember, SARS can also be called the receiver. Okay, so I might say here, instead paid the amount owing to the shareholders and SARS, I can say the shareholders and the receiver. Then you know it's tax. Okay, now we already paid. I'm quite sure you guys also paid both, né? Did you pay both? Did you do that? No. Okay. Did Sir just start with the income, up with the dividends?
Yes.
Okay. So you did pay the dividends. You did pay the shareholders. Okay. Now we also need to pay SARS, and we owe SARS 5,000. So that's the first one. Sorry, this is already written. I did it yesterday, but I'm going to go through it very nicely. So, because I think it's good if you hear it again anyway. So now you'll see here what I highlighted is the orange. It says here, paid the provisional tax. Paid the provisional tax. What's provisional? If you are living in the Stone Age and you're living in Europe, what happens in Europe in the winter? It snows. So, what do they do? What do they do in the summer? They gather food. And they put the food there in their grotto for winter. And they call it what? Their provisions. Meaning, they know the winter is coming. They're going to be hungry. So they make provision for it. Can you see how the word provisional tax comes along? Now, I just said, what's the most important thing in a company? The profit or the cash? The cash. Now, if a company makes billions of rands profit, can you see it's going to pay billions of rands tax? Next, just think on R1,000,000, if the percentage tax is 30%, it's 300,000 rand cash that needs to go out. So now what the company law says, he wants to help the company not get into a position where he has got cash flow problems. Okay? So he breaks down the payment of tax into two parts. He says, you know you're going to have to pay SARS. You're going to owe SARS income tax because you're going to make a profit. Let's take that profit and calculate the tax on it and divide it into two provisional payments. So I start paying even before I know what I'm owing. How will I know how much I pay? I'm going to take into account, that's where your actuaries comes in. So they're going to go and look what was your previous year's profits, and they're going to look what's your profit up to date, and they're going to do a calculation. Yes?
And you still need to pay tax if you get a loss?
No, definitely not. But you don't want a loss because then your shareholders are going to take out their shares. And if all your shareholders start selling their shares, what's going to happen to the price of the share? It's going to drop. And why don't you want your share price to drop? Because it's not good for your reputation. And people won't want to buy it then. Unless there's maybe a future expectation that you're going to pick up again. Is everybody with me? Yes. I think it's different because they are not a company. So it's different. They are going to be taxed on their personal income. Okay. So they will work on the payee scales. So let's look. So now we're going to do two provisional payments. But look here at the green. They tell me my net profit is 330,000 and my income tax is 30,000. So, okay, can you see it happens after I pay? So let's pay. Can you see the 45 and the 45? Here it is. I paid it. I know I'm going to have to pay income tax. I'm going to owe SARS income tax. Ne? But I do not know the amount up until I know my profit. So the amount there is empty. But I'm going to start paying it off. You see? So I pay 45 and I pay 45. Does that make sense? Then I go and I calculate. I go here and I calculate. So I'm going to reverse things here. I know the 330 times 30 gives me 99,000. You get it? So I know I want 99,000 here. I owe 99. How much have I already paid? 90. Ne? So I owe SARS 9. And that 9 goes to current liabilities in the face of the balance sheet. I usually say the face. You guys happy? Okay, now that 99 actually also needs to go to the T account for income tax. You see, there's the double entry. Everybody shopped. I know I'm going fast. Is everybody happy? No questions. The 245,000 is what I call my provisional payments. In other words, I know I'm going to owe tax. I don't know how much, but I know it's a lot. So I'm going to estimate how much. And then I'm going to pay half of it halfway during the year, and the other half of it a few days before the end of the year. And then I see how much I owe, and then I can see, do I still need to pay in? And can you see, if it was 89,000, then SARS owed me 1,000, then it would have been a debit balance. Are you shocked? Everybody with me? Yes, baby.
So, ma'am, if you overpredict and you pay more than what you're supposed to pay, that's when SARS comes and asks you.
Yes. And let me tell you, in an exam, you have to look out because they're going to ask you the face of the balance sheet. And you can know they're going to jump it around. It's not always a liability and it's not always an asset. They like jumping it around. So be aware. So just write for yourself this. If the income tax is more than the provisional, such is a current liability. If the income tax is less than the provisional, then such is a current asset. So in other words, this would be it's got a credit balance and it's got a debit balance. Okay. And then, because income tax is an expense, I know I need to close it off the end of the year. But this doesn't form part of profit and loss. Ne? Profit and loss is my net profit before I calculate tax. So it's going to go to my appropriation. Appropriation. Appreciation. You know, that one. Okay. I'm going to stop the video.